2. All right, so I'm long inside of this fair value gap. Again, it is a opening range trade, so I'm lowering my risk. Only trading 2 micros, which is really, really light. Using this fair value gap as an entry, basing it off the order block. Stop loss, I want it to be beneath this fair value gap. So I'm trading this lower fair value gap here as a breakaway gap. I don't want to see that traded to at all, but I'm allowing price to trade in the upper half of it, so my stop loss is just beneath consequent encroachment. And let's say I do something where this trade pans out, takes out the buy side, and I lock in like 20 points or something. If it gives me room to add another micro or 2 in pyramid, then I'll look to do something like that, just to build this up a little bit, because I at least want to make 500. So if I can build up this small position, I would. I'm going to take a small partial at this new week or new day opening gap. Can't remember which one, but if I can get that partial, I'll take it. Recoup some of that loss from yesterday. Get back some of my equity. And then I'll be more comfortable letting my last micro run. And then if I find a pyramid entry, I'll do something like that as well. Looking at S&P and the Dow, they're both looking fairly strong at the moment, which is what I like. Dollar still being held in consolidation, that's fine. I'm watching these 2 down close candles. It's wick, really this last one as a bullish order block. Want that to send us higher. Last down close candle before that displacement. Looking at the wick from the opening price all the way to the high. That's what I'm looking at. Stop will only get moved to break even if we can accelerate above this high. If we get some speed above that, then I feel comfortable taking off my risk. But again, it's a real small position, so I'm not really thinking about my stop loss right now. I'm more thinking about seeing if NASDAQ can give me a pyramid entry, because I do want to build this up a little bit. It's pretty small. All right, so now I'm watching, do we get speed above that high? I want to see if we have energy, a lot of momentum, and that'll tell me how high NASDAQ wants to go. But right now we're trading that small little gray line is an old new day opening gap. I don't want to see us stall around that. I want to see us get speed above it. All right, moving my stop to break even, which is underneath this down close candle, also underneath this wick, which is what I like. Didn't you say you wouldn't chase price? We're not chasing price, baby. We've taken out sell stops in a bullish market. Traders who had their sell stops underneath these lows here. Underneath all these lows, we talked about the 3 jives pattern. All those traders got knocked out. Now I want to go long after taking out all of these traders. And there we go. That is our partial. So we're going to let that do its thing. And adjust this. As far as targeting, at this point, I don't want to add another pyramid because let's say I buy another contract somewhere up here and the trade reverses on me, then I just gave back the partial that I made. So I'm not really interested in pyramiding anymore. I think I just want to trail my stop, manage it, and see how much I can squeeze out of this. But the nice little partial recovered at least a third of what I made or what I lost yesterday, so that's nice. Make sure I cover commissions a little bit. The Dow's really accelerating higher. Let me see. I want to see if I could finesse a little entry. So if I add one more micro, that's $2 a handle times 25. 2 times 25, that's about $50. So if I risk another $50 and I made 2 times 40, I made 80. It's just not worth it. I'll just let this run. You have to cut, bro. I'm telling you, the commissions will eat you up, especially if you're trading a lot of micros. Y'all playing. The micros will eat you, especially you see these people trading like 30, 50 micros. It's like, all right, if that trade doesn't pan out, you're paying commissions on each one of those 50 micros. It adds up, especially if you go on like a losing streak and you're just losing. Not only are you losing that trade, you're losing commissions, you're paying commissions. That stuff be adding up, man. So I always make sure I place my stop in a position where I can cover commissions. Look at Tim. I never preach copying my trades. I don't care if I win or lose. I know Tim just playing, but for all the new people in the stream, I always tell people, do not copy my trades. The whole purpose of the live streams is just to learn how to read price action so you can be able to do it on your own eventually. I know some people said they struggled with like watching me trade and they just have the urge to copy my trades. If that's the case for you, just watch the live streams after I'm done. So trade on your own. This is for people who don't have a model. You don't really know what you're doing yet. Just trade on your own. Don't watch the live stream. You know, whether you lose or win on your own, that's fine. But then come back, watch the replay of the live stream. I keep them up in Discord for about a week or so. And then just compare my analysis that I have for that day, compare it with yours. And in that way, you're still getting better. You're still learning how to reprice without the temptation to copy my trades. That's for the people who just, you know what I mean? No, one NQ commission is not equal. So one NQ commission for TradeStation, I think is, I don't even know, $2.50 round trip, $2.50, I think, or something like that. But one micro commission is like $1 round trip or $1.50. I don't know. All that stuff is on their website, but trading 10 micros is more expensive than trading one mini because you have to pay a little bit more in commission, so it's not equal. A lot of people think, oh, I could either trade, 50 micros or just 5 mini contracts. I'm going to trade 50 micros and take a whole bunch of partials. You can do that, but you're going to be paying way more in commissions. I'm going to use some standard deviation. A lot of people ask, how do I use fib projections and whatnot? So we have this drop down that took out sell side I'm going to take that low up to this high here. Let me use this. So this swing low up to this high, I'm going to project that higher. And -1 standard deviation, that's going to be my terminus if I can get it. Extend that to the right. And I want to make at least 200, so I'm going to leave my TP where it's at. Looking at Dow. Dow's retracing pretty hard. Quick glance at it. Here's Dow. Here's S&P, both having some retracements. NASDAQ inside this fair value gap. I'm tempted to buy another one, but it's not worth the risk since I already taken a partial. It's not worth it. Because if that doesn't pan out, I just gave back my partial and then I had to force myself to look for another setup. So I only want a pyramid before I take partials. I'm going to go to my monitor and look for some targets on NASDAQ should it want to continue higher. Let's see. Go to it. Hourly chart, I actually really like the buy side. Up here, above this high. I like that. And you have all these clean highs up here. Getting a retracement, trading inside this fair value gap. Again, we are in a deep premium. We're above, way above the midnight open, way above the 8:30 open, and we gapped higher by nearly, I think, 200 handles or 300 handles. All right, and there we go. The last contract stopped out in profit. I could have slapped on 2 more micros on that, but it's all good. I'm watching to see if we cross this opening price of this down close candle. All right, so I'm long again. That first trade was really light. Aiming for that buy side on the hourly chart that we outlined. And my stop loss is beneath this down close candle, which low comes in at 22.50. 22 even is fine. And this will be my last trade for the day. Stop gets moved to break even. Let's just do some more standard deviation. So if we're bullish and we have a retracement lower like this, I just like taking the low, taking the high, projecting that higher. I'll move my stop to break even if we can take out -1 standard deviation. NASDAQ just traded to a 5-minute bullish order block. This down close candle here, we open, trade down, hitting the opening price. See you, Retro Gear. Appreciate you tuning in. Isn't she pretty? All right, reducing a little bit of that risk underneath this candle's low, which comes in at 43.50. 43.50. So that way, if my stop gets hit, it'll be pretty much a break-even day. Because I would have just given back this one partial, but that was just one micro, so I really don't care about that, to be honest. And like I said earlier, for my account size, anything less than $100, I consider that a break-even because it's really, really minuscule. So. My focus is these two down close candles now. A slight flex. Not really. Not really. I'm looking at mean threshold. So taking the candle range from this candle's high to that candle's low, I'm watching midpoint. So main threshold of the order block is here. I'm closing. I don't like it. I don't like it. I'm gonna watch it though. Experience kicked in and told me to close. I'll take my little win. But I do want to watch this to see if it pans out. I'm gonna taper it as if I was still in the trade. But every now and then, rarely, I'll be in a trade and I'm sitting in it and it's just like, you know what? It's just telling me to get out. Winning trade, it was a small win, the first attempt, and then wanted to see if I could capture a little bit more. Went long again, but closed it at break even because it just wasn't worth it. And now the price action we're getting, I'm glad that I did. Love y'all, man. Be safe. See you tomorrow at 9:30. Peace.